Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 20th of June. All right, now just coming into the Asian session here. I forgot to mention yesterday it was a US holiday, so markets have been somewhat asleep, right? There's not much going on. Now, the news services, this is what you'll find as we come into the start of the week, they will really focus on what is the key events, right? And of course, the Bank of England interest rate decision is probably the biggest one, being the central bank. But we know there's a lot of sterling data coming out. CAD is back from 9-month high on position squaring. Well, I'll tell you what, the data, the PPI data yesterday, a little bit weaker than expected. Of course, the dollar's just going to retrace a little bit. But so we are basically getting primed for trading activity this week, right? This is where the market reconnects. And for those new traders sort of joining us, right, Mondays aren't the best day to be trading in the first place. But let's just have a look at the general global markets here. And with the US holiday, sort of no major change in the equity markets. Cryptos are up a little bit. Oil sitting pretty stagnant. Gold's just pretty steady. And euro trading sideways. A little bit of a slight little rally there in the dollar, on the dollar index, right? So that market there, if you looked at it yesterday, you would think it hasn't moved, and it basically hasn't. Okay, that's the key to this. So, but look at the currencies now. Things really pick up Wednesday, and I'll show you the data in a second. So I'm still thinking nothing's changed here. If anything, looking to sell dollar on rallies, looking to buy euro on dips. Same with sterling. This is a good one here actually to show you Aussie and Kiwi. Now we saw at the end of last week some really weak Chinese data. But this shows me, or tells me a lot about the price action here. Now, you see euro trading sideways, sterling slightly down, but trading sideways. Now, the sterling market would be long, anticipating the interest rate hike and things, but there are other data releases coming out, which could give it a bit more life. Now, the Aussie market, even though it came back and just drifted through this trend line, it tells me that the market isn't substantially long. Otherwise, we would have seen a bit of a stop loss run to the downside. Same with Kiwi. Like these, when they come up to big trend lines like this, I mean, they're not massive trend lines, but they are, significant enough. The market would sort of generally have a stop loss run and then clean out to the downside. The fact is the market is happy to be buying dollars here. Okay. Aussie and Kiwi dollars. The thing here with euro and sterling is their trend lines are much lower. So the market isn't loading up just yet. So just be aware of that, because that's a telltale sign that the market is looking to get long. And exactly what I've been saying, like if I just clear the screen again, looking to sell dollars here, like dollar Swiss, and not necessarily on that retracement line. You'd be coming back to this new resistance line that's sort of just forming, right, up towards 90 the figure. Nice big round number there to be selling at as well. Now, dollar CAD, I'll show you the data in a second, but weak PPI. So a little bit of weakness in the CAD. Dollar sort of rallies a touch, but it's not really going anywhere. And if you look closely, I've overlaid oil there, the light green. You can see how much of a stranglehold oil has on the value of dollar CAD at this point. So I'm still thinking at this stage, there's no reason to change my view that we'll see euro, sterling, Aussie, Kiwi higher and the dollar lower. Now, dollar yen, it's like the yen crosses are screaming to the top side. Euro yen, sterling yen, Aussie yen, Kiwi yen. There's no change there. I like the idea of getting short dollar Swiss there on a rally as well. Dollar CAD, well, it's a bit trickier because the trend line's so much higher. All right, so that's where we are, chaps and chapettes. The main thing to be looking at now, if I just come back to the sort of main screen here, is looking for, what's coming out, what can impact the market today. Now, don't forget, this is the start of the week. US holiday. We do have a bunch of there's some loan numbers coming out of China. I'm not really sure how much they impact the market, but we do have the RBA meeting minutes, and then we got a couple of RBA ponies coming out to have a bit of a chat. You've got German PPI numbers, bit of construction output. Like there's little odds and ends. Okay, don't get yourself all sort of bent out of shape. If anything, what we're looking for, it'd be nice to see to fit in with the picture. Okay, some of these building numbers, right? There's three parts of the building numbers or housing numbers out of the US. And if these come in a little bit weaker, it just adds to the story, right? Now, this is the third week of the month. So all the big data is out, and this is when you can start to see trends start to really start to move. Okay, and that's what we need to be sort of keeping a focus on. As I was saying, coming to Wednesday, the inflation numbers Wednesday, well, they're going to be the key focus leading into the Bank of England on Thursday. So that's what that's a full day away. Now, you've got a few Fed officials, ECB officials talking there as well. You know, you may get the odd left field sort of remark, but at this point, I'm just watching a bit of the numbers, just seeing if everything lines up. And then once the North American session opens up today, we'll have a much better idea of how they're sort of sitting with regards, you know, what do they think about the Fed, interest rates, ECB, etc. At this stage, there's US equities are off, and there's no clear risk on, risk off focus, right? So just be sure of that. Equities lower at the moment, dollar lower. That's the aim of, or that's the way it's playing out. And just keep an eye on those commodities. They've been in play quite a lot. And that's pretty much all we've got, guys. There's not much to do today except look for these various releases coming out. Tune up for Wednesday. That's when sterling's going to come into play. And most importantly, do not get complacent with your analysis. Okay, so continually come through, clean up your charts, make sure you know exactly where those pressure points are, as in support and resistance levels, and then you can really start to piece things together, right? And don't be afraid to start to like draw in the new trend lines that are starting and see if they make sense. Like this one here on sterling, like draw it over to current level, and you go, okay, well, this is in play. You got a couple of touches there, another touch here, and there's our latest trend line, right? So you're sort of sometimes thinking, well, the trend line below is so far away, but maybe it's not. And the same for euro, but it doesn't look as clear as day with euro there. Okay, so just go through your charts, get organized. The momentum will come from these fundamental releases, and that's where your better trading opportunities will sort of really start to form and play out. All right, guys, have a good one. All the best. Cheerio.